Welcome to the HMO Property Show by investors for investors. Brought to you by the HMO Property Co, Australia's leaders in impact investing. Investments made with the intention to generate a measurable, beneficial social or environmental impact alongside a positive financial return. Catch us weekly as we discuss all things cash flow positive property investing.
Welcome back to the HMO Property Show. I'm your host, Neil Gibb, and today I've got my first return guest, Mr. Troy Felt.
Thank you very much, Bud. Appreciate it.
Welcome back, mate.
Yes.
So we've spoke about construction, and you've been the expert in the construction area, been in there for quite a while.
Sure.
The next big thing that everyone's starting to speak about is NDIS.
Yes.
And you've been operating in that space for quite a while now. So I thought, again, I'd bring you in as the area expert and dig a little bit deeper, because a lot of people that I speak to who are looking to invest in cash flow positive investments, it's either HMO or NDIS.
Yep.
And I thought it'd be really relevant to record a podcast with you.
Fantastic, mate. Appreciate it.
So NDIS and SDA, two phrases that I hear thrown around quite a bit. What do they stand for?
So NDIS is National Disability Insurance Scheme, which is a government program to assist people in people with disabilities. So it ranges from various levels depending on their disability. And then the SDA, it relates to property, so it's specialist disability accommodation for the NDIS program.
Right. So NDIS is the scheme.
Yep.
SDA is the accommodation.
Yes.
Right. So and then we put that into layman's terms. The HMO is the house.
Yes.
And the policy is what allows us to build that house.
Correct.
Yeah. Cool.
Correct.
All right. Awesome. And, like I say, I speak to a lot of investors every single day, and a lot of them are either looking at a HMO or looking at NDIS/SDA. Do we call it NDIS or do we call it SDA?
Well, SDA is relating to the actual property, so it's
Right.
probably best to talk about the SDA, which is under the NDIS scheme.
Okay.
So
Great. So people are either looking at HMO or SDA.
Yep.
Where are the opportunities in the SDA space? Because, like I say, it's a hot topic and government backed, so people seem to like that. But what's the opportunity with it?
Yeah, listen, the NDIS or the SDA product is quite young in WA, so we kind of lag behind eastern states. So we're about 3-4 years behind. So we had a lot of lessons learnt and what went right and what went wrong over there. And so with that, there's a lot of pent up demand in terms of participants. They've currently have 1,160 participants living in hospitals, aged care, not fit for purpose dwellings.
Yep.
And there's a mandate for them to be moved into the private sector, which is the SDA product.
Yep.
And the reason why there's such a push, one, because it's not really fit for them. An 18-year-old kid living in an aged care facility is just not suitable, nor for the aged care provider and the NDIS participant. And for the government, it's costing the government 3 times more, double, sometimes 3 times more, depending on the level of cost, to put them into a private sector, into an SDA dwelling.
So even though the rental income these things can generate is what seems excessively high, they're still saving money by doing that.
Significantly.
Yep. And the government also don't need to go out and fund the construction on these things because they're incentivising investors to do it.
Correct.
Okay. You touched on the market there and what we've, it's been happening on the East Coast for quite a while, and we've learned a lot from what's went right and wrong over there. Can we touch on what's went wrong over there? Because sometimes people say that they've got an SDA that's vacant.
We've got to be mindful that the participants choose where they want to live. Yeah, they choose who they want to live with. So it's important to identify where the locations are, how they want to live. And so what we found is they were in poor locations with low demand for participants, and the configuration of the built form wasn't suitable. Yep. So they skimped or reduced cost according to the built form rather than taking real consideration of the participant. So if you understand what the participants want, then the participants will be filled. And when you look at the stats behind it, right location product in good built form product is leased. Yeah.
And obviously there's, because it's government funded, you can't, it's not just a standard go out there, she'll be right sort of build, is it? We're talking high specification.
It's highly regulated,
Yeah.
And there's strict criteria we've got to follow, which is under the NDIS Design Guidelines 1.1. That is the minimum requirement, not the maximum, the minimum. So we need to be able to take that consideration when we're designing something. Is let's exceed it.
Yep.
Yep.
And what's the difference between the minimum for NDIS or SDA compared to minimum for standard residential, for instance?
Well, yeah, there's a lot of questions in there. So there's 4 levels of disabilities with participants, and so you have an IL participant, which is low care. Then you have a FA or a full accessible participant, which is medium level of disability, and then robust, which is a mental disability, and then you've got high physical support, which is high level disability. So you need to design a product that caters for, in my opinion, at least all 3 of them. A robust design needs to be designed specifically for that participant with a mental disability, but the other 3. So when you design product, if you design it with a high physical support participant, the other 2 are going to work well. So you need to put in wide openings, structural steels to support future hoists, 0 thresholds, adjustable bench tops. Automation is really important in terms of provisions for. I even believe that, we should be putting in facilities in the bedroom, such as kitchenettes and so forth. They spend a lot of time in their rooms, so let's make it, appropriate size, an appropriate, environment that they can enjoy living in.
Yeah.
So.
And when we look at one of these things compared to a HMO, for instance, it's same but different, isn't it? Essentially, obviously the actual floor plan, the size of that floor plan, because we've got people with wheelchairs, we can't get as many rooms into an SDA as what we can for a HMO for the same size. But the rental income is so much higher, isn't it?
Definitely. The principles are different, but they're significantly different in terms of you've got to have, significantly larger bathrooms, larger bedrooms, circulation space for SDA product is crucial. And you've got to really consider, that element for people with disabilities and have it future-proof so that participant, once their health deteriorates, or if it deteriorates, then the home caters for that.
Okay.
Yeah.
And how is the different levels of rental income calculated? You touched on the different levels of care.
Yep.
I'm guessing the different levels of care generate different levels of income.
Yeah, so the participant owns the rental income, so to speak, based on their level of disability. Yep, so I mentioned earlier you got 4 levels, and so depending on the disability will determine what level of income they get for an SDA dwelling. Yep, and then you've got to design a product accordingly for that, and it has to be certified to receive income for that for the SDA property.
Right, so we've got to build it to the minimum spec.
Yep.
And then it's got to be certified as well.
Yes.
And then we've got to find a tenant that's got approved funding from the NDIS.
Correct.
Wow, a lot of moving parts.
There is.
A lot of moving parts.
Yep.
How long does it take to lease one of these properties then, once they're built?
So when it first rolled out, we found that it took generally around 4 to 6 months. Not because the demand wasn't there; it's the connection. It's actually engaging with the people that need this accommodation, and that took a bit of time. And because we were behind and over east in terms of bringing product to ground, participants weren't aware of what was coming to ground, what was available. So currently, speaking to our SDA property manager, they're leasing them out within 2 to 4 weeks.
Wow.
So it's certainly improved because the awareness of accommodation coming to market is a lot more available in terms of stock coming to the market. But yeah, so there's a lot more engagement in the communities in terms of SDA product.
Yep. And you've done quite a few of these already in Western Australia, haven't you?
Yes.
Yeah. Cool.
Yep.
What's it like when you see someone with a disability moving into these houses?
Oh, it's a great feeling, seeing where they've come from, and seeing where they're going into, and not just the participants, also the family members.
Yeah.
I mean, the carers.
Yep.
It's a great outcome. So
impact investing, hey,
absolutely
making a difference.
Absolutely.
Love it. Is there a suitable configuration for an SDA? Have we found out what the best thing is? It's 2, 3, 4, 5 bed, single story, double story, class 2.
Yeah. So if you go back to the participant, they choose where they want to live. When you look at the statistics behind that, we find that the 1 participant, 2 participant dwelling are the most popular, and then it starts to decline into when you go to a 3 participant, 4 participant, 5 participant. So that really the configuration of 2 participant, 1 OOA dwelling is probably the best configuration in terms of the type of dwelling, whether it's an apartment or a townhouse or a house or a green title house or a group housing. It really depends on the location. So if a client wants to live in, say, close to the CBD, it's going to be very difficult to get a house in that location. If it's, say, for example, West Perth, which is a very high demand area, you're going to find that there's going to be apartments versus houses. So it really comes down to where does the client want to live, where does the participant want to live, and then have the built form suitable for that. So.
And how do you find out where the participant wants to live? Is there a list of where the demand is?
Yeah, if you look at the NDIS website, they have area locations of where the demands are. So some areas have 1.05 times of the income. So if the income is X, then it's going to be 0.5% more if you house them in that dwelling. So, but then if you delve into the expenditure in an area, you can kind of see where those kind of demands are, and you've got to delve into the detail behind that. But you can kind of see where that demand kind of really lies.
Yeah. So the rental income changes on the area that you put these things in, right? Okay.
Because the government wants to incentivise people to put product in areas where there's high demand.
Okay. Yep. Cool. And how does the property manager fit into our list? So we've got the participant that's got the funding from the NDIS.
Yep.
We've got the developer that provides the housing. Does the property manager act like a general property manager, collect rent on behalf of the investor? Pretty
much. They're the glue to the whole success of it. So they're effectively a property manager that specialises in and certified to provide SDA property management under the guidelines of the NDIS scheme. So they receive the funds and then disperse that to the landowner.
Right. Okay. Yeah. Is there any other moving parts in there that we're not aware of?
Oh, there's a lot. There's a lot, but there is a lot of auditing requirements because you are receiving government funding. In terms of maintenance, in terms of inspecting the property, every person that's going into that premises needs to be certified as under the NDIS scheme.
Yep.
So they've got to have a team around them to be able to service and manage your properties accordingly.
Yeah, okay. And I'm guessing with the level of spec or standard that we've got to build these to, we're essentially building a mini hospital, that's fair to say, isn't it?
Yeah.
And the overnight care that's on there as well. You had a conversation, me and you previously, you said, look, the happier we can keep the carer, the happier the tenants are going to be.
That's it.
And the longer they're going to all stay there together, and there's a nice little unit. And what we've seen on some of the other ones is the carers don't have en-suites, for instance, but you've gone through and put en-suites in with the carers as well.
Sure.
And made them rooms kind of like a HMO room in a sense.
Definitely.
Yeah, which is really cool.
Yeah, it's interesting because before the NDI scheme came in, I was doing some charity work and having a look at what non-profit organisations do and seeing some of the new facilities they've built, and seeing the effort and the work and the involvement that the carers provide them good facilities.
Yeah.
They earn it.
Yeah.
It's a tough job, and I think the OOA facility or the carers facility needs to have a breakout area. They need to have a bit of a kitchen, little, and an ensuite, as a minimum. So yeah, make it an environment they like to work in.
Yeah.
So
keep them happy, and they'll keep you happy. Yeah.
That's it.
So the demand, there's obviously there's demand out there. Probably not as high as the HMO demand because it's an open market and we're really limited to people with disabilities.
Yeah.
How big is the market in Western Australia?
Because there's such a massive lag in terms of roll out the NDIS. We've only got about 107 properties completed in the NDIS SDA accommodation. So, we've got roughly about 2,300 participants out there. And it's a matter of connecting with them and engaging with them to bring them into a superior built form. And as I mentioned earlier, there's 1,160 in accommodation now that they need to be rehoused, in suitable accommodation, and there is a mandate for that to happen. And it's a requirement, and it needs to happen. So, yeah.
So what happens when, because 2,000 participants, let's say we build a heap of two-bedders, that's 1,000 houses. What happens when we catch up that demand there?
Yeah, good question. When you look at the stats reported recently, they're predicting 62% increase in SDA demands nationally by 2030. That's only eight years away.
Yep.
Right. So 62% increase in demand.
Yeah.
So I can't see it easing, and I can't see it slowing down in the short term.
Yeah.
Yep.
I mean, it's still a lot of properties, isn't it? 2,300. Let's say we probably need 3,000 properties, something.
Or if you say you house them, 2,300 participants, that's and that's a 2-participant dwelling. That's half that, but that's a lot of homes.
Yeah.
And it's not an easy built form to deliver, and there's not many organisations that can actually deliver these outcomes. So it's restricted. So
that's a good point. Let's speak about the builders then. Can any builder build these, or do we need to be dealing with specialists that have got experience?
My recommendation is you need to have a builder that can build this type of built form. And it might look and feel like a residential builder, but there's some real complexities around the built form, and it really needs to be considered and understood. And the design guidelines is one thing, but actually complying is quite a challenge.
Awesome. What about area recommendations? I know you said there's a list online that we can check. Is people always say to me, like, what's a hotspot for it? I don't really know a great deal about it. Where are the hotspots?
I think if you look at what participants really want to have around them, it's public transport, shopping centres, medical and pharmacy is really important. So preferably all those things are within a K away would be ideal. And you're going to have a successful project in that location. There's some locations that are very hot that can't provide all those facilities, and there's still a very high demand. So it's about understanding where those location demands are, and the trigger is have a look at the NDIS website, have a look at where those locational factors are, and you get a higher income return on those. Kind of gives you an indication where that demand is, but also look at the expenditure in the suburbs. Yep. So you can type in postcodes, have a look at the expenditure in a location, and get a good indication of how many participants are going to be needing some form of accommodation at some point.
Yeah. So, what is the expenditure that we need to consider for an SDA?
In terms of a location, geez, they vary. They vary, and because some postcodes are quite a small area, you've got to factor in that as well. So Mandurah was a very, very very high demand area, the precinct, but I know there's a lot of product coming through that area currently, so we're not focusing that area. But right now there's a lot of areas in very high demand.
Yeah. So, what about bills and furniture packs and stuff? Because when people again compare this to a HMO, what puts some people off a HMO is the fact that they need to pay for the bills, or that's factored into the tenant's rent. And then there's also another piece of expenditure there, which is a furniture pack, which they need to buy in the back end. Is that the same with NDIS?
No, that's funded under the NDIS, separate from the SDA accommodation. So the participant's responsibility to pay for consumable costs, and also their furniture. And keep in mind that they've got an allowance for power and water and things like that. So it's important to design a home that factors that in, because they've got a budget they've got to work on. So consider what type of aircon units you put in there, so that if one participant likes to be a certain temperature and the other one likes to be different, they need to really consider that, so that the consumable costs aren't being negatively impacted by one participant.
Yeah, cool. And that's funded by the NDIS as well. So is that a separate payment that comes in on top of that rental income?
Yes.
Yeah.
Yes.
Awesome.
That's completely different. Yep.
So when we look at it, the entry point of capital or equity required is probably less for an NDIS than it is for an HMO, because we don't need furniture packs and other things like that.
The builds are more expensive in the SDA products.
Yeah.
So there's some advantages and disadvantages with the HMO. I've seen HMOs getting similar returns as an SDA that are really presents well. So it just really depends on the appetite for the client and what they're really looking for. So yeah.
I think both HMO and SDA have that social benefit outcome as well. You're really helping people that need it, whether it's someone with a disability or whether it's somebody that just needs affordable accommodation.
Yep.
Both of them tick them boxes. It really just comes down to the investor's risk tolerance. And, if you build a HMO, you've always got a house. But if you build an SDA, you've essentially always got an SDA. It's going to be really hard for it to make it anything else, isn't it?
Definitely, because you are investing a lot in that home, specifically for SDA purposes.
Yeah.
But the investment warrants that.
Yeah.
So it's a matter of going, what's the appetite and what they're willing to consider.
Yeah.
If someone says to me, what should you do, SDA, HMO, I say both. I think they're both very good investments.
Spread the risk. Yeah. How long is the NDIS scheme in place for? Did we touch on that?
So an SDA has got the funding allocations for 20 years.
20 years, okay. So these things can generate, I think it's like 120k of rental income per annum.
Yep.
And you could get into one of these for between $150,000 and $200,000 of cash or equity. So within year 2 or 3, you're essentially neutral on your investment, and then after that, you're making some good money as well.
And it's also CPI. So what's going to happen over the next few years in terms of where the CPI rate is, it's fixed to that. So you're going to get a regular income increase in terms of revenue each year.
Similar to commercial.
Yep.
Yeah, right. Okay. Brilliant. Now, I know this isn't really a question that you can answer because you're not a financial advisor in any way, but would you buy one of these in your own name, or would you buy it in a company structure?
Listen, it really depends on individual circumstances, but because this SDA is a medical asset, there's some tax advantages in getting it into the appropriate structure.
Yep.
And I'll encourage just seek some advice relating that. So
yes, and we've definitely got the A team around us for that one. Mr. Troy Felt, thank you very much for coming in again and sharing your knowledge with us.
Very welcome.
Becoming a regular on the show now, mate. We'll have to get you in again.
Thanks very much, man. I appreciate it.
Very welcome. And quote of the day today is, knowing that you don't know is more useful than being brilliant.
Mate, I love it. Love it.
Thanks for listening. Make sure you tune in the same time next week so you stay up to date with all the cash flow positive property updates.